In the complex world of global finance, a currency swap deal is a powerful tool. It allows two countries to exchange currencies. Essentially, they agree to borrow and lend each other's money. This agreement lasts for a specific period. Currency swaps serve several purposes. Countries use them to manage their foreign reserves. They also facilitate smoother trade and enhance financial stability. Imagine country A needs a large sum of country B's currency. Instead of going through the open market, they strike a swap deal. This direct exchange bypasses market volatility. It provides stability for both parties involved. These deals are becoming increasingly common. As the global economy evolves, such agreements offer flexibility. They allow nations to navigate the ebbs and flows of the international financial system. China has been making headlines with its recent currency swap deals. These agreements signal a potential shift in the global financial landscape. One notable deal is with Japan, a major economic power. Signed on October 25, 2024, the deal involves a substantial sum of 200 billion yuan. Another significant agreement was reached with Mauritius on September 4, 2024. Though smaller in scale, it demonstrates China's growing influence in Africa. This deal aims to boost trade and investment using local currencies. Furthermore, China renewed its currency swap deal with Pakistan on October 17, 2024. This agreement underscores China's commitment to strengthening ties with strategic partners. These deals are not merely financial transactions, they represent strategic partnerships and a growing acceptance of the Chinese yuan. This shift could have significant implications for the US dollar's dominance. The rise of currency swap deals, especially those involving China, has sparked debate about their impact on the US dollar. One key concern is the potential for reduced demand. As more countries engage in trade using their own currencies, the need for the US dollar could diminish. This trend challenges the long-held dominance of the US dollar as the world's reserve currency. For decades, the dollar has been the preferred currency for international trade and investment. However, the increasing use of alternative currencies like the yuan could erode this dominance. Despite these challenges, the US dollar remains deeply integrated into the global financial system. Its immediate collapse is highly unlikely. The sheer volume of dollar-denominated debt and its widespread use provide a buffer. However, the long-term impact is less certain. If current trends continue, a gradual decline in the US dollar's dominance is possible. This shift would have far-reaching consequences for the global economy. Section 4. The future of the US dollar. Predicting the future of any currency is a complex endeavor. The US dollar is no exception. While it faces challenges, it also benefits from deep-rooted advantages. The US economy remains the largest in the world, providing a strong foundation for the dollar. However, the rise of emerging economies like China is reshaping the global economic landscape. China's growing economic might and its push for the yuan's internationalization could exert downward pressure on the dollar's value over time. The short-term outlook for the US dollar remains relatively stable. Its collapse is highly improbable in the near future. However, the long-term picture is less clear. Sustained economic growth in the US and prudent fiscal policies will be crucial in maintaining the dollar's strength. Factors such as global interest rates, inflation, and geopolitical events will also play a role in shaping the dollar's future. The interconnected nature of the global economy means that any significant shifts will have ripple effects across the world. Section 5. Key considerations and conclusion. As we navigate this evolving financial landscape, several key considerations warrant attention. Geopolitical factors, for instance, play a significant role. China's currency swap deals are not just about finance, they are also about strengthening strategic alliances. The economic strength of the countries involved is another crucial factor. The stability and reliability of a currency are intrinsically linked to the issuing country's economic performance. In this regard, the US still holds a strong position, but China is quickly catching up. The future of the US dollar and the global financial system is intertwined. While a dramatic collapse of the dollar is unlikely, a gradual shift towards a more multipolar system is already underway. This evolution will likely involve a basket of strong currencies, with the yuan playing an increasingly prominent role. In this fluid environment, adaptability and diversification will be key. Countries and businesses alike will need to navigate this changing landscape with prudence and foresight to ensure their continued success in the new world of global finance.